The core objective of any asset manager is remarkably simple: generate returns for investors. But as a fund grows, finding those returns quickly takes a back seat to the friction of scale. Tracking millions of individual investors, processing thousands of daily cash deposits, and verifying constant regulatory compliance becomes an overwhelming, highly expensive distraction. To survive, money managers outsource this heavy lifting to specialized third parties. In the finance world, these entities are known as registrars and transfer agents, or RTAs, along with fund administrators. KFintech operates as an invisible technology layer, specifically a platform as a service provider. Today, they manage the back-end data for over 172 million individual investor accounts, known as folios. By removing the financial industry's biggest operational headaches at this scale, KFintech has positioned itself as an essential, high-volume infrastructure provider. Historically, KFintech's largest revenue engine has been domestic Indian mutual funds. This diagram shows their central ledger role. KFintech holds 32.5% of India's mutual fund infrastructure, earning fractional fees on continuous massive volume. But their infrastructure extends into issuer solutions. When private companies go public, someone must officially manage the registry of every new shareholder. This map shows KFintech's digital corporate tools, like software for e-voting and insider trading management. Moving up to post-issue services, their dominance is clear. They manage the corporate registry for 50.8% of the NSE 500. Over half of India's top 500 companies rely on them. Capturing both the mutual fund ledger and the corporate shareholder ledger creates an inescapable web of sticky, recurring revenue within the Indian economy. While KFintech's main competitor relies heavily on the Indian mutual fund market, KFintech's strategy targets aggressive horizontal expansion across different geographies and asset classes. This financial document outlines their geographic reach. KFintech is actively exporting its tech infrastructure to 18 global jurisdictions, operating direct subsidiaries in markets like Bahrain, Malaysia, and Singapore. They are also expanding their asset classes. KFintech now manages the administration for alternative investment funds, complex private pools of capital, alongside traditional wealth management. This global and alternative push is rapidly accelerating, now accounting for roughly 20% of their total revenue mix. Add in their role as a primary record keeper for India's national pension system, plus a suite of direct-to-business data analytics tools, and the picture broadens. By layering these diverse ecosystems together, KFintech has built a multi-geography platform that distributes its revenue risk across several international markets. So how exactly does managing back-office plumbing translate into the highly profitable valuation of a tech company? This graph illustrates the mechanics of an asset-light tech model. Once KFintech builds its core software platform, the flat line here, the cost to onboard the next international client or domestic fund is virtually zero. Looking at their Q1 key figures table, we can see exactly what that operating leverage yields. KFintech routinely generates EBITDA margins exceeding 40%. The business scales through code rather than headcount, turning operational friction into a high-margin cash-printing machine. Global wealth is continuously expanding, and the cross-border regulations required to manage that wealth are only getting more complex. KFintech's diverse revenue mix actively insulates the company against local economic downturns. If domestic mutual funds experience a slow quarter, their Malaysian pension business or their corporate IPO software can absorb the shock. The organization is currently integrating its domestic expertise into a larger play as a global fund administrator, as indicated by the emphasis on business diversification in their recent performance updates. Financial institutions are incredibly risk-averse. Once a firm integrates an external platform for its core ledgers and compliance, they almost never replace it. The revenue is deeply, permanently sticky. As long as the world creates wealth that needs to be securely tracked, governed, and distributed, KFintech will be the silent, highly profitable engine running the ledger.